opening up a CFD account if you haven't. So this promo will be until 30th of June. So it's quite soon already lah. It's actually going to come to an end soon. So I urge you guys to actually start opening. If you haven't opened a CFD account with us, you can start opening up an account. All right. So just probably wait for another 1 or 2 minutes, 1 minute plus, and then after I will start the webinar proper. So I'm not sure if you guys actually seen the markets yesterday, the US market. So today I will be talking about the tariffs, and then how the tariffs will actually affect the market. So recently, as of yesterday, right, we saw our first rebound. I mean, after last few weeks, it's been always coming down, and then yesterday, I think the S&P was up 2%. So today I see already it's flat now. So what happened was actually consumer sentiment was actually up. So that's why the market started to realize there's some confidence still in the US market. Yeah, so that's why the market came up, but I'm not sure now how we will do today, how we will fare today. So yep. Okay. Let's see. For a moment. All right. So I think we can start proper. All right. So my name is Joe. Hello and welcome to everybody. So let's take a look at what I'm going to talk about today. All right. So in today's series, we will talk about Trump's move, okay, in the last few months, of which he actually imposed a reciprocal tariff on tax on imported goods on at least 185 countries. So Trump first spoke about imposing tariffs on China as a retaliation during his first term as president, okay? And then now resumed this move during his current term, raising tariffs after April earlier this year, as you all know. So since this implementation, right, of these tariffs in April, the S&P 500 has shed over $4 trillion from its peak in February. So it went to a peak of the S&P went up to a peak in February. I think it's up to 6,000 points, okay, if I'm not wrong, and then it came back down already. So from then until now, it's actually shed over $4 trillion, which is a lot of money. All right, just because of Trump's words, we can see that the market has actually corrected. So we can imagine how many people who are actually bought at the peak would have lost money. All right. So in today's webinar, we shall attempt to analyze and answer these questions. All right. Will there be any impact if the tariffs were to be imposed? All right. What other impacts will affect the market if the tariffs were to be imposed? So another thing is there a possibility of a recession? All right. And has Trump's popularity among Americans declined, okay, ever since he imposed such actions? All right, Trump has been very popular. I mean, that's why he got elected the second time as a US president. But ever since he imposed these tariffs, has his reputation actually declined? Is he still popular in the US? So how many of you, okay, here, let's take a quiz, a short quiz, okay? How many of you here think Trump's popularity has declined in the US? If you think yes, Trump's popularity has already declined, he will not last in the next election, you can put a yes. And if you think Trump still remains popular, right, you can put, remains unpopular, you can put a yes. And if you think it's not popular already, you can put a no. So can anyone show some oh, good. Lee says no. Anyone else? How popular do you think he is? Oh, Wilfred says yes. All right. Come on. Hopefully we can have some participation here, so I will not be the one talking alone. Anyone else? Let's take a good guess. All right. Thanks, everyone. Thanks all of you who actually participated. All right. So we will look further later and we'll see whether Trump's popularity has actually declined or not. Okay. So before we dive in, okay, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. All right. So since the 1980s, Trump has advocated for import tariffs as a tool to regulate trade and retaliate against foreign nations that he believes have been ripping off Americans. So therefore, we can see that Trump has been very persistent in his beliefs since the 1980s. So this is not new to him. All right. So what is a tariff? Okay, for those of you who do not know what a tariff is, I'll try to explain it quite simply. Okay, a tariff is actually a tax imposed by the government of a country on imported goods. Okay, besides being a source of revenue, import duties can also be a form of regulation for foreign trade and policy that burden foreign products to encourage or safeguard the domestic industry. All right. So these taxes are typically passed on to consumers, raising the cost of the product. So for example, if a product is valued $100 and has a 10% custom duty, the price will rise, okay, to up to $110. So in his campaign for US presidency, Trump promised to use tariffs to achieve a wide range of goals, including preventing war, reducing trade deficits, improving border security, and subsidizing childcare. So while campaigning for his second term as US president, Trump initially pledged even larger tariffs than his first term, including a 67% on China, 100% on Cambodia, and 50% on the European Union. He also proposed tariffs to penalize US companies that outsource manufacturing, such as a possible 200% tariff. So although Trump has said that foreign countries pay his tariffs, US tariffs are fees paid by US consumers and businesses, either directly or in the form of increased prices. So shortly after being re-elected to the second term, Trump acknowledged that tariffs might cause some pain, okay, for the Americans, but insisted that it will be all worth the price and this price must be paid. Okay, so now let's look at Trump's popularity among Americans. For those of you who replied, who polled earlier, and let's see whether you got it right. Okay. So yes, so a CNN poll released on March 12th found that 61% of Americans and 72% of young adults disapprove the way Trump is actually handling the tariffs. So 59% of Americans without college degrees and 62% of those making less than 50,000 also disapprove of his move. Therefore, will this approach of tariff implementation affect Trump as the next president? Okay, will Trump be the next president that caused the recession? This is very important. So if Trump were the one who caused a recession and people find that cost of living is very high, I believe that Trump's next election will be, he will not stand the next term in the next term for presidency. All right. So Trump's recent Liberation Day, okay, on the 2nd of April, pertains to the implementation of new tariffs on imported goods into the United States. Okay, here is a breakdown of what this entails. So these tariffs, right, aim to reduce the US reliance on foreign goods and addresses what he perceives as unfair trade practices. All right, the implementation tariffs include baseline tariff of being placed on all countries, and then further reciprocal tariffs on countries deemed to be the worst offenders of these trade practices. So these tariffs, right, are designed to be reciprocal, meaning they are intended to match the tariffs of other trade barriers that other countries impose on US. So it's a tit for tat. All right, the tariffs have a 10% baseline, all right, that will be placed on all countries that the US would trade with. Then there are also further reciprocal tariffs that will be placed on countries that are deemed to have unfair trade practices with the US as well. So in this table, you will find that these countries that are affected by the tariffs, okay, some of you might have seen it out in the media. So based on this table, you will find that countries like China, Vietnam, South Korea, Thailand, Switzerland, Cambodia, Bangladesh, and Sri Lanka have relatively high tariffs rates. However, the situation really remains fluid as Donald Trump changes his positions regarding the tariffs very frequently also, which I will discuss later, what the latest outcoming of his discussions are regarding these tariffs. So how are actually these tariffs calculated, right? So simply, okay, these tariffs are calculated using the formula as above, shown here. So this takes how much a given country sells to the US, and then it subtracts how much the country buys from the US to calculate the trade deficit, and then divides the trade deficit by the country's total exports to the US. So we take an example, such as the European Union, okay, here, that and this resulting number came out to 39% based on the formula which I showed. All right, here. So this number, according to the White House, represents the alleged unfair trading practices of which the European Union has against the US. Okay, so this one can be also divided roughly in half to produce the US discounted reciprocal tariff shown in the table on the middle column. All right. So some experts, right, have also criticized how these tariffs were calculated, and these calculations could cause ambiguity, leading to more serious implications on the economy. So economists also have actually expressed concerns that these tariffs could lead to increased prices, as I mentioned earlier, for consumers, and then potentially disrupt global supply chains. So there are also fears that retaliatory tariffs like these from other countries could escalate into a trade war, a full-blown trade war, and could cause serious implications to the global economy. And then after that, subsequently a recession. However, this move is consistent with Trump's America First trade policy, which prioritizes domestic industries and aims to reduce the US trade deficit. In essence, right, Liberation Day signifies the commencement of a new phase in the US trade policy under Donald Trump, characterized by the imposition of significant tariffs on imported goods. So here, how many of you think that recession will occur in 2025? So any of you are bearish? Okay, if you all are bearish, right, you all can just put a yes if you think there is a recession, or no if you think that it's not a recession. Okay. Hold on. Wow, thanks a lot. Thanks, Evelyn. Okay, anyone else? So right now, right, I will show you guys what I actually take a look to see whether there will be a likely recession or not. There are a few indicators we can actually use on to actually see if a recession is coming. Okay. So here, the US markets have actually seen have since been affected by Trump's announcement, and experts have actually mentioned that the chances of a recession has increased. Okay, the probability of this increase was estimated to go to 57% from the previous 40%. So this is a poll that has been done by some analysts, all right, and then based on actually the confidence level of Americans, they think that there's a higher chance of a recession. Okay, but again, this may not be accurate. Okay, this is only a sentiment by the American citizens. Okay, so what are the three indicators I usually use? Okay, the indicators I usually use to sniff out whether a storm is near. Okay, it's slightly near. Is I will usually look at firstly the GDP growth of the US GDP growth, and then unemployment rates of the US economy, and the manufacturing output, or we call it the industrial output. Okay, so let's look at the first indicator, the US GDP. Okay, so what does the US GDP made of? Okay, the US GDP, or the gross domestic product, is actually a comprehensive measure of the total market value of all final goods and services produced within the United States during a specific period, typically a year. Okay, it's a key indicator of the nation's economic health, reflecting the size and growth of the US economy. Okay, so you see here, the latest first quarter, right, US GDP data already shows a decline by 0.3%. Okay, what this decline actually comprises of? Okay, this decline is primarily due to a decrease in consumer spending and a downturn in government spending. Okay, these are already red flags that we can see during the first quarter because of the tariffs. Confidence level has been actually taken a hit in the US. So people think that these tariffs may not gel well with the Americans, with the rest of the world in terms of trade. Okay, so also there's a downturn in government spending, but were partially offset by investment exports, thankfully. So what we will see is at the second quarter, okay, if the second quarter has another negative downturn, then we will know already. Likely, the next half of the year, also things will get very slow. So businesses will feel it, and then their outlook will be very negative, and then it's all a spiral, and it will spiral all downwards, and eventually become a economic recession. But I hope this will not happen. All right. So we still have to take a look what is going to happen in the second half of the year. So second half of the year will be quite important to me at least. All right. So I'm really studying what's going to happen in the second half of the year. Especially, we also will take a look at earnings season as well to really understand whether companies are still actually having good earnings outlook or not, okay, for the next half. So another indicator to look at will be the non-farm payroll, which refers to the number of employed people in the United States, excluding those in agriculture, private households, and non-profit organizations. It's a key monthly indicator of the US labor market, reflecting the number of jobs added or lost in the economy. Okay, let's see how the employment is like as of recent in the US. So here the total non-farm payroll employment increased by 177,000. Okay, and then the unemployment rate was unchanged at 4.2%. So employment continued to trend up in healthcare, okay, transportation, warehousing, financial activities, and social assistance. So all these sectors, there seems to still be employment. Okay, the average unemployment rate in the US was 5.68%, okay, calculated from 1948 to 2025. Okay, while the unemployment rate actually peaked, as you can see here, at 14.2% in 2020 during the COVID. So today, the unemployment rate is actually at 4.2%, which is still below the long-term average. So the non-farm payroll indicates that employment in the US is still going strong, just as I showed earlier. And then the unemployment rate is still below the long-term average, indicating a healthy US job market so far. All right. However, unemployment data could indicate some lag. Okay. And we will need to see the employment data in the next half, okay, to determine its stability in terms of more jobs added or people are actually getting retrenched. Okay, this one we will know in the second half of the year. Okay, the final indicator I usually look at is the manufacturing output, or we use the purchasing managers index. So what does the purchasing managers index actually measure? Okay, we also call it the PMI. Okay, so the PMI is a monthly economy indicator that gauges the health and direction of the manufacturing and service sectors. This is quite important because it will show that whether factories are still producing or not. Okay, it's also a sort of a diffusion index, meaning it summarizes whether the market conditions are expanding, contracting, or remain the same based on the views of purchasing managers. So a PMI reading of 50, above 50 generally indicates expansion, while a reading below 50 suggests contraction. Okay, let's take a look at the recent US PMI. So the PMI currently registered a 48.7% in April, okay, a 0.3% percentage point lower compared to the 49% recorded in March, indicating, okay, a contraction. So in April, the US manufacturing activity slipped marginally further into contraction after expanding only marginally in February. So why? It's because demand and output weakened while the input strengthened further, indicating conditions are not considered positive excuse me, for economic growth. Okay. So as we are now back into the US earnings season again, okay, we will have to look at how companies actually performed during the last earnings season in the US. Okay, this is also what I will look at. So we have noted that 64 companies have reported EPS or earnings per share guidance, okay, that will be above prior guidance. Okay, this is actually quite low, I would say. Excuse me, while 139 companies gave outlook that would be similar to the prior year. So you see, out of so many companies in the S&P 500, 139 already said that they think that growth will not. There will be stagnant growth. All right, they are still optimistic, but stagnant. All right. So based on the data above, in my own opinion, most companies, like I said, okay, will be factoring in a slower second half. So let's see what happens as of recent. What did Trump actually do? All right. Okay, so if you have read the news, or some of you who haven't, okay, Trump fortunately has reached an agreement with China as of recent, okay, to reduce China's tariffs and eliminate retaliation, and retain a US baseline tariff on China. And this will set a path for future discussions to open market access for American exports, which is actually a good thing. All right. The United States also issued the first joint statement on trade in many years, okay, with China after successful negotiations in Geneva, Switzerland recently. So both parties affirmed the importance of critical bilateral economic and trade relationships between these two countries. So, which is a good thing. So in reaching an agreement, the United States and China will each lower tariffs by 115%, while retaining an additional 10% tariff, okay, while other US measures will still remain in place. Okay, China would remove the retaliatory tariffs it announced in April 2025, and will also suspend or remove the non-tariff countermeasures taken against the United States earlier. So China also will suspend its initial 34% tariff on the United States. It announced, okay, for 90 days, but will retain a 10% tariff during the period of the pause. So this is actually very mutual. So whichever US do, China also will do likewise. So you see, the United States will suspend also 34% reciprocal tariff, okay, imposed for 90 days, and will retain a 10% tariff during the period of the pause. So this pause, the pausing of higher tariffs for 90 days, okay, resulted in some companies front running imports and orders. So we will likely see in the next quarter, okay, some export companies or import companies or factories will actually front run their orders. So we will see a bump in orders. Okay. So, however, what happens next is Trump move on to the EU instead. Okay. So the EU will now face a considerably higher tariff rate compared to China. So this is an almost unthinkable scenario. Just a matter of weeks ago only. You see how fast Trump actually changes his stand. At first, he was actually targeting the Chinese. Now he said, okay, we discussed with the Chinese, and then he attacks the European Union. So you can tell how fluid things will actually go, and the markets will actually be very, very volatile. So Trump said, okay, on his Truth social media platform recently that he was recommending a straight 50% tariff on the European Union from 1st of June. Okay, as discussions with them are going nowhere so far. So now the EU is one of Trump's least favorite regions, and he does not seem to have a good relations with its leaders, which actually increases the chance of a prolonged trade war between these two countries. Okay, Trump has also announced a 20% tariff on EU goods last month, but suspended measure to give space for negotiations. So Trump, however, still maintains the 10% levy on imports for the EU and nearly every other nation around the world, along with 25% duties on car, steel, aluminum, and aluminum industries. So therefore, with Trump, right, uncertainty still looms for the US markets. Okay, because Trump always changes his stance as and when he wants. Okay, so now we can see, we take a look at the S&P 500 year to date. All right, we can see that the S&P 500 is now up 0.9% year to date, which I don't think is a very very spectacular in terms of returns, since the beginning of this year until now. It's only returned less than 1%. So if you have invested at the start of this year, I think investing in fixed deposit will be better, right? Because the returns is less than 1%. So will investors continue to remain cautious? All right. And will the stock market continue to remain volatile and uncertain? Okay. So we've actually seen the market went up to a peak of 6,000, okay, earlier this year, which because of the crash, that's why, and then now the crash, and after it picked up again and crashed again and rebound again, that's why the returns is quite relatively small at 0.9%. So how many of you here right now think that it will come back to 6,000 points again by the end of this year? So if you all have already done technical analysis, you know how to use charting, right? Can you let me know? Like if you think that it will go above 6,000 points, you can put a yes. Or if you don't think it will go up 6,000 points again, it will come down again below the 5,900, back to 5,000 points. You also can give me a no lah. Yeah. So I'll let you guys actually put up on the chat if whether you would think that the S&P will reach above 6,000. So if you all have actually done some charting, you can just let me know. Right. Wow, Great White Shark says no. Okay. Some of you say yes. Evelyn says yes. Wow, you all are very bullish. Wilfred also says yes. So you're still long. That's good. That's good. That means to you guys, there's still opportunities to actually trade and make some profit along the way by longing the market. All right, okay, I'll give you my point of view here. Based on my charting, I'm not sure if you all guys will agree, but this is just my opinion on how I see the market. So now I'll show you guys, right, what I see. Okay, wait. Okay, so here we will use technical analysis to check out whether the market will continue to climb or continue to come down. All right. So this is a daily chart of the S&P 500. Okay. And from this chart, right, we note that the largest decline was on the 8th of April. Okay, declining 4%. Of course, as circled on the yellow circle here. Okay. So it declined 4%. Okay, represented by the long candlestick, red candlestick, closing at 4,982 points. So why this happens? Because of course, at that point of time, Trump actually just announced the tariffs. But you see, from then, the next day itself, on the 9th of April, it rebounded. So the market was, I think that the market believed that it was actually overreacting. Okay, so that's why things started to pick up. So if you have traded during a point of time, on the 8th of April, and you believe that the market has overreacted, you would have made some sizable gains during this short period of time since April. All right. But still, it has come down from the peak before the tariffs were announced. Right. In the next one, I drew a blue line, okay, at this level to represent a potential immediate support at the 5,679 range, as prices have actually tested this region and rebounded twice, okay, from this level. And back in October and November in 2024, which is quite some time ago. Okay, so we look at this as the blue line. Okay, this blue line will be the immediate support that I've put in, okay, for a good trade. Okay, a good buy. If let's say you would like to actually buy into the S&P 500, I will believe that this one will be a good immediate support to get in. Okay. Should the market continue to weaken, okay, so if let's say it falls below this 5,679 range, all right, then the next major support level I see would be around the 5,300 or 5,400 5,380 to 500,410 range, okay, region, represented by the red line below. So this is also a very good point to probably enter. Okay, if you're not really looking at catching a foreigner, because again, you will never know how low the market will go, right? So at this point, at 5,400, I think also it will be a good range to actually enter already. If let's say the market does come down further. So what I will do is I will usually do a discounted DCA, meaning I will average down every time it actually when the market actually comes down, the S&P actually comes down, I will go in at major support levels because I'm a long-term holder. So I would like to actually buy S&P at the dips, not at the peaks. So and then I will accumulate. Okay, I will budget in a certain amount and then I will start accumulating. So this is what I will do. All right. This is, of course, for those of you who actually can take volatility. So some of you actually who realize that, wow, this one, the US market is really very volatile. I cannot really take short-term losses. I think you better stay away because we will never know what Trump will say and then he will just push the market down further. So if you all are those who are already going to almost retiring and you don't actually stuck, keep on putting money to average down on the S&P 500, this may not be a good strategy for you. Okay, so should the market continue to weaken, as I said, okay, you can actually start buying in again at lower points. So another one I will use actually also is the RSI. Okay, so if with the RSI, okay, here we can see, okay, the RSI actually is calculated by comparing the average size of the price gains on up days and declines on down days. So it is actually used to help traders identify potential overbought or oversold conditions. All right. So anything above the 30 points, the 30 region, okay, indicates an overbought situation, and anything below the 30 region, right, indicates an oversold region. So let's take a look at the RSI of the S&P 500. Okay, so the RSI on the S&P 500 is currently above the 30 range, indicating an overbought situation, as you can see from the RSI 14 days, the RSI 14 below. All right, so it's already sitting it's already almost at the peak already. So because of this, right, I noted that the upside could still continue, okay, but could be limited already. So therefore, I do not think it will break the 6,000 points level very soon. So the likelihood of a down, the likelihood of the market coming down will be higher based on my opinion. Based on my opinion, right? Okay. Another thing we will look at also is the P/E ratio of the S&P 500. So why I think it cannot go above the 6,000 points is because the S&P 500 is already currently trading at 28 times earnings, while the index median, okay, so the S&P median is just at 19 times. So the average, the long-term average is only 19 times. So the P/E ratio already is currently trading at 28 times. So again, we already know it's already most of the S&P 500 companies are already trading at a premium. So because it's trading at a premium, right, I think that the market has to actually correct itself. All right. And already because of the tariffs that are already announced, we will know that things will get, businesses will tend to scale down. And then because we scale down, earnings will be lower and prices, the share prices will have to come down. Okay. So even though most companies in the first quarter, which is recently, their earnings, they just actually came out with the earnings season. First and second quarters, some of them already announced their second quarters. You can see that most companies actually did pretty all right. Okay. However, you would know that that's what I said earlier, what I mentioned earlier, that most companies actually do already forecast an outlook that's not so bright in the next half already. So that's why they're already accounting for worse off second half. Okay. So to stabilize the markets, right, negotiation on tariffs have to come to a definite conclusion sooner. So this will actually stabilize the markets and then investors will be more confident to start coming in again. So should this be the case, right, then whatever earnings multiples that the S&P has now around 28%, at 28 times, I mean, could be still considered reasonable. So actually everything falls back to the tariffs. So once the tariffs actually concluded, Trump has actually made sure that he is actually given leeways to all the countries. Most countries actually come to a mutual agreement, right? Then again, I think companies will then start to realize that, okay, this is a time to actually start coming in to, reinvest their capital again. So now companies are also very afraid to reinvest their capital. Why? Because imagine you bring all the companies into the US, you bring out you exit your investments in the foreign countries, and then you bring all your investments back into US. But what if Trump in the future does not become the president again? Then you will be most companies will be in a situation that, oh, they already invested so much already, they have to actually, they cannot just start to withdraw their huge capital. So that's why most companies are now very cautious in terms of actually capital expenditure spending, right? So that's why there's still so much uncertainty on how these reciprocal tariffs will play out. So for now, I would say look away from the US for those who are not very who are actually risk averse. Okay, you would like to look at more stable sort of businesses. Okay, stable markets. I think we should actually look away from the US. So what to look at, right? Of course, the best one is to look at is Singapore. All right, Singapore is considered still a place which you are more familiar with. Okay, compared to the US, because US, businesses, you will not know how the businesses will go because of how Trump actually keeps changing his position, right? So one thing I'd like to look at in Singapore is actually the REITs market. So a good stock to look at will be blue chip Singapore REITs, like the CapitaLand Ascendas REIT. So why do I say so? Okay, the reason for this is because Singapore REITs like Capital Ascendas REIT has a well-diversified portfolio with 60% of its assets based in Singapore, which is a good thing. Okay, because most of its properties are based in Singapore, and you guys already know how Singapore property market will go. All right, it's of course generally, of course, there will still be risks, of course, but generally it's still understandable that because Singapore, the land size is small, there's still a lot of foreigners coming into Singapore. Definitely rental rates will go up. There are more people actually migrating into Singapore as well, right? So the remaining 40% will be based in Australia, UK, and the US. All right. So 40% is still a sizable amount of portfolio overseas, right? But again, I still like CapitaLand Ascendas REIT because of its dividend yield as well. So the weighted average lease expiry for CapitaLand Ascendas REIT, okay, is 3.8 years, okay, with 12.6% of its gross rental income due for renewal in 2025. So what does it mean? Okay, this means that most of its actually lease expiry for most of its properties, it has an average of 3.8 years. Okay, so this means that it provides a predictable runway for continued distribution payouts, at least for the next 3 years. So this is what we need to look at for REIT as well, whether they pay consistently in terms of dividend distribution or not. So some REITs, they actually invest a lot into foreign markets and then very little in Singapore. All right. Then when something happens in that country, which you will not be familiar with, it will tend to become a situation that they do not pay out any more distributions. And then you will not receive any distributions for a long period of time. And the price of the REIT will come down drastically. So you've invested in something that does not pay you any passive income, or something that you actually require, right? Passive income, because of most people invest in REITs because of the high dividend payout. But we must also see whether they can pay out consistently or not. So that's why I prefer something like CapitaLand Ascendas REIT, because most of its assets are based in Singapore. And then when I look at the weighted average lease expiry, it's at least 3.8 years. So it's relatively a safe REIT to invest. All right. And based on today's closing price at 2.61, the REIT currently pays a dividend yield of 5.85%, and has a PE ratio of 15 times. Okay. So by looking at this chart here for CapitaLand Ascendas REIT, so where do we go in? We don't go in at any price as well, because why? You take a look at there's sometime in September 2024, September-November period 2024, the prices actually peaked at around almost $3 before coming down. So imagine if you have invested in this REIT at a high price, all right, the prices come down, you made a capital loss, but you get dividends paid out to you, you will still not be able to cover if the losses is too great. So always go in any stock, right, at the right price. When you go in at the right price, okay, and then you get good dividend, you get a better dividend yield. This is where you take advantage of your capital gain plus dividend yield together, right? So here I will show you what I see in for CapitaLand Ascendas REIT, where is a good price to go in. So I know that prices have been trading sideways since November, okay, to the 2024, and a good price to enter could be at the 250 range because it's trading sideways anyway. So it's quite easy to actually take a look that it's hit 250. Every time it hits the 250 range, it rebounds back up. Right, so I think investors believe that at the 250 range, it will be actually a fair value for capital at Ascendas REIT. So you can see already keep on rebounding at around 250 means this is a good price for you to actually get in. Should you want to trade, you also can trade. You can trade you can buy at 250 and then you sell off once you actually reach the top part of the channel. So at 250, right, assuming a similar full year dividend last year of 15 cents, this will actually give you a dividend yield of at least 6%, which is very good because 6% is actually much better than a lot of other companies out there that actually pays dividends. And then if you get 6% consistently throughout the next 3 years, for example, I don't believe that it will pay 15 cents this year, all right, because rental will go up. So definitely when you buy at 250 and when they does actually announce a higher dividend, you will get a higher dividend yield. So for the next 3 years, at least you'll be getting something around the 6% or even higher if you can get in at a good price. So at the meantime, I would say that because currently the price is around 260, okay, it's a good time to actually, I think, wait it out, okay, before you actually start entering the market again. All right. So in terms of such a global market uncertainty, right, I suggest that people who actually cannot take risks, again, look for less volatile stocks with high dividend yield. So you can find a few in Singapore as well, with high dividend yields and less volatile, especially in Singapore. Okay, so Singapore will be my preferred choice for now. All right, so with this, I thank you guys to stay throughout my webinar. All right, and if you have any questions, I'd like to answer them now. So I'd like to see, let's see if you guys have any questions. Okay. MC said went up more than 2%. Yes, correct. It went up more than 2% yesterday. But again, how much actually how far more it can actually go up? Like I said earlier, there's still chance of actually still there's a chance of an upside, okay, but the downside is actually much higher. That's at least to me, because again, Trump policies are very fluid. So Trump can actually just change his policy stance and then the market will just start coming down again. So because the market is so uncertain, right, I tend to stay out of it, and I tend to look at the Singapore market instead. Yeah. So any more? Let me see if you guys have any more questions. Okay, there's none in the Q&A. Yep. So you guys have any questions regarding what I've just said, or any opinions? What do you think the market would be like? Do you think that actually going into Singapore REITs is a good idea, or do you have any other stocks that you like to look at in Singapore as well? I'll keep the chat open. Oh yeah, one more thing. Yes, I'd like to show here as well. All right. Here's the links for account opening, and you can also join our Telegram group. So our Telegram group, right, actually will share with you guys about our daily stock picks. All right. So sometimes we will talk about stock ideas that actually we look at, and then you can also start looking into them. or do further research. So we screen out for you some stocks, and then you can do further research on them. Okay, so we share stock ideas in this exclusive Telegram group to our audience as well. So you can start try to download, try to scan the QR code and then join this group. We also will share with you daily updates on the markets. Yeah, and then what industries to look at as well. Yes, correct. DBS, yes. Yeah, one more thing also, the banks are actually also paying very good dividends. Yes, thanks. Yes, DBS is also good. Yeah. What's the DBS dividend yield at the moment? I think DBS also pay a very good dividend yield, you know. Let me see. Yeah, you guys can actually take a look at DBS as well. The banks are actually DBS paying 5%. Yeah. So another thing to look at is also the banks. Yeah, the banks are also paying OCBC, DBS. Yeah, apart from REITs, yes. Thanks, Jackson. Yeah. Apart from REITs, you also can look at the banks. These are also very good. Something that I will look at lah. Okay, in terms of the Singapore market, I try to stay away from penny stocks or any mid cap also. I'll stay away. For me, I won't touch Singapore mid cap also. So I will also look at banks and I think banks and REITs lah. Most of the time. Yeah. Thanks, Jackson. Yeah, DBS is good. Here, MC also says, what happens if S&P goes up to 6,000 and does not come back down? Uh, of course, if you are long, you're a person who longs, then congratulations. I mean, you will make money because if it goes back up to 6,000 points and above that, I think it will be really very bullish because the last time it went up to 6,000, it did not stay above 6,000. It came back down. So hopefully this happens because I also hope I have a portfolio in the US as well. So definitely I hope that the S&P will go above 6,000 points. I actually buy a lot of Magnificent Seven stocks. Yeah, so I have a portfolio of them. So recently, as my profits also have been wiped out because of Trump, right? So definitely, yeah, I will hope that I'm a bullish I'm a long-term bullish American US market supporter. Yeah. Show the slide. Okay. For example, China EV stocks. There's so much hype. Correct. For China EV stocks, yes. Actually, there's a lot of hype back then. I would say I think that people are actually looking back into China again. Yeah, because China and Hong Kong. Yeah, because the US already very uncertain. So I think there's some investors also looking into the Hong Kong market again to pick up good quality stocks. If a good EV stock, I would say for China, I think BYD lah. That's my personal favorite. Yeah, BYD. Thanks, Wee, for that. Show the slide. Which slide? Which slide you want me to show? Great white shark. Any more? Let me see. Is that Q? Oh, there's Q&A. Wait, hold on. I'll take a look. So there's this anonymous attendee. Not only fluidity, but also what Trump wants to achieve in the US. Do you think it's possible to make manufacturing in the US? Here I would say manufacturing in the US, okay, there's a lot of risk involved because imagine one day Trump doesn't in the next term, okay, he instead of the Republicans, Democrats get back into the government. Most investors who actually really started to invest in the US already realized that wow, we fund in billions of dollars, bringing our factories back, and then now because of this change of stance that maybe the tariffs will just be, you know, in the future there will not be any more tariffs, then this will be very risky for the companies as well. Yeah, so making manufacturing in the US, it will definitely push up the prices. So in the future, prices will become very, very costly in terms of actually, you know, for example, the iPhones, anything that is made in the US in the future is going to be very expensive. Then Americans themselves will start to pay higher prices on it. So I don't think Americans will be very happy with that as well. That's why I think that Trump's popularity would have to come down when this situation happens. I think for now, no. Okay, I think most Americans are still think that he's quite a good president. Okay, I don't know how. That's not when I showed you the polls. I don't know how accurate those polls are. How many people actually what's the population size of that poll? But anyway, more I think still Americans are not feeling the pinch yet. All right, until maybe let's wait for the next half of the year and to see how. All right. Another one, okay, won't the increased interest rate be bad for REITs? Yeah, of course, increasing the interest rates would be bad because interest rates, the REITs also do pay debt on, I mean, do pay borrowing costs. So because they pay borrowing costs, it will actually cost the margins to be lesser for REITs as well. So this one we have to also bear in mind. But for now, I would say that 5% is actually still good. Okay, 5-6%. Because they still pay a better dividend yield than a lot of other alternatives, which I cannot find any other alternatives for putting my money. So that's why I would say, since I cannot find anywhere to put my money, I will actually put my money into REITs. Okay, any reason to stay away from mid-cap stocks? What is your cut-off market cap? I don't have any particular cut-off market cap for myself. Because why I said I stay away from mid cap is because I'm not confident myself, because I do not know, because in Singapore most companies announce their earnings half yearly. So I compared to the US, because US every quarter they actually show you their 10K and then the 10Q, okay, their annual reports, the quarterly reports. But for Singapore, it's not very transparent in a sense. That's why I don't really look into it. So for example, there's some stocks I like also, like Silver Lake, for example. These are actually good tech companies as well. They invest in the banking, like CIMB Bank, what do you call it? Their internet banking system. Okay, it's run by Silver Lake. But again, I don't see to me, it's still very high risk. So that's why I say I prefer something simple. So REITs will be good. And then also another one will be the banks. Banks will be good. Because at least I know that they are here for the long term, right? Capital Invest. Capital Invest is also good, yeah. Because Capital Invest is actually the sponsor for SNS REIT as well. So they are the main sponsor to sponsor this REIT. So they are also part of the Capital Land arm. So I would say that yes, as long as the dividend yield you see is reasonable to you, and when you look at the charts, it's a good price to enter. You don't buy at a peak. It's good to actually invest into it as well. Yeah. Right. Thanks for the Q&A. Thanks for putting your questions in the Q&A. Okay, let me okay. The Telegram site. Sorry about that. Okay. Okay, here's the Telegram site. I think I will just put it up here. Yep. Yeah, see any more questions? No, Give me a minute. Yeah, I think I got 2 more questions. Thanks, guys, for putting up your questions. Do you have any high yield ETF from Hong Kong EX? Any higher Hong Kong? I'm not very familiar. Yeah, so sorry, Anson. I would not know. I would not know at this point of time. Yeah, for the any high yield ETFs from Hong Kong Exchange. Yeah, but you can actually use your poems to actually take a look at which Hong Kong Exchange ETFs you like. You can screen it okay, from the prices. When you actually search the instruments part, they can look at ETFs, and they can screen a huge list of Hong Kong Exchange ETFs. But however, you need to actually look through one by one, which ones has actually a good dividend yield. So unfortunately, I don't know. Yeah, because I'm still more prone to looking into Singapore instead of actually US. I mean Hong Kong . Yeah. All right. Any One else? Have any other questions before I end the seminar? All right, guys. Thanks so much. Thanks so much. All right. Hopefully you guys enjoyed this webinar. Okay. And if you would like to actually sign up for the Telegram group, I'll just leave the slide here for you to sign up. All right. Thanks, guys. Have a good evening. Thanks a lot. Thanks, Willie. Thanks, VE. All right. Goodbye.